What's up, homies? It's Tony. I'm just kidding. It's your favorite market recap host, Max Pitts from Trades and Gains, baby. And today we're diving in to a market that's floating like a butterfly, but with the grace of a drunk toddler. We've got crashing jobs data, Trump threatening to nuke global trade again, Apple getting dunked on, and NVIDIA still doing just enough to keep this whole market duct taped together. So grab a caffeine, maybe a Xanax, and let's make sense of this madness. Why don't we? So to kick things off, our big boys. Our big boys came through. We had the S&P 500 just fall above flatline at 0.01%, minimal gains. We had the Dow Jones with a 0.22% drop, broke its 4-day win streak. Shocker. The NASDAQ was up 0.32%, and big tech is doing just enough. And the 10-year Treasury was down 4.3.6%, or down to 4.3.6%, lowest since May 9th. The bond bulls are back after the weakest ADP print in over 2 years. Speaking up, our ADP jobs report expected here was 114,000 jobs. And what did we deliver? The reality of this situation was 37,000. That's like thinking you're going to ace the ACT and coming in the bottom 1%. Jesus, that's not a miss. That's a vanishing act like Houdini, like your gains in ARKK. Let's be honest here. Now, ADP called it uncertainty paralysis, which is Wall Street speak for we're too scared to hire anyone because we don't know if Powell is going to throw a chair next meeting. Don't know what that means, but whatever. Bond yields drop faster than Netflix subscribers after a password crackdown. The 10-year Treasury yield, as we mentioned, down to 4.36%. That's the lowest since May 9th, folks. Rate cut hopes just got another sugar hit. Meanwhile, Trump saw the print and rage posted. Too late, Powell must now lower the rate at 2:17 a.m., by the way. Healthy hours, healthy hours to be tweeting at our person. Anyways, next up we have ISM Services PMI. It dropped from 51.6 to 49.9. That's contraction territory, baby, which is code for stuff slowing down and no one's ordering more paper clips. Now, why does this matter? Services is 77% of the US GDP. When services slow, everything slows, folks. Think of it like Walmart catching a cold. Everyone else gets pneumonia. Now, Wall Street heard contraction and immediately started pricing in Fed rate cuts and a Q3 Fed pivot spa day. Now, did someone say chaos in all this, by the way? Because Trump just doubled down on steel and aluminum, as the British would say, tariffs to 50%. Because what says economic stability, like taxing your own imports right before CPI data drops? He also called G extremely hard to deal with at 2 a.m. Markets didn't blink yet, by the way. But if you've been in this game since 2018, you know how this movie ends. Delays, inflation, and a market sell-off. Let's be honest here. Keep your eye on July. That's the retaliation deadline. Wall Street may not care now, but it will when Chinese semiconductors get slapped with the 85% import tax and your GPU now costs $4K. So, before we kick off our next thing, let's talk about some options flow. And of course, we're going to use our favorite data provider, Investor Central Club, where we take all that market noise and turn it into actionable insights. If you would like a discount, get 70% off your first month by using the code 130. You only get it for $30. Now, this is where what the whales are doing while you're still refreshing Reddit and looking for the latest tweet that is giving you an entry for some reason. Smart money bets, we saw Meta with 42 million in call flow. We saw SPY with 217 million in calls versus 17 million in puts. We saw Tesla with let's go ahead and pull up Tesla here on our flow scanner. SPY, we saw 39 million with 21 million in calls, by the way. Tesla, we saw 26.3 million with 21 million in puts as well, or in calls as well. That's a lot of YOLO, but wait, there's more. QQQ, we saw 10.5 million in calls, but we saw 11 million in puts. That is hedging hard. In CAR, aka Avis, we saw 3 million in calls versus 7 million in puts. And then with Tesla, we had a spicy 11,725 call for 380. Someone's betting Musk's next X post won't tank it. Now, our most telling, we saw SMH Semiconductors, $0 in calls, 4.7 million in puts. Translation, big money's worried the chip rally is cooked or at least sizzling too long. And then there's dark pool prints here. We had BIL and VXUS, 309 million and $277 million blocks. Safe haven flows. QQQ also saw multiple $180 million trades today. Smart money may be riding this rally, but they're definitely bringing their seatbelts for the world. Now, back to our market news. We saw Apple getting downgraded again. Yes, it happened again. Now, the stock's down 18% year to date, the worst of the Mag 7. Why did this happen? AI anxiety, the Chinese drag, and margins look as thin as an iPhone case at this point. Wall Street is starting to treat Apple like a boomer tech stock, aka cool, but not AI cool. Now, talking about some retail roulette, Dollar Tree says Q2 profits may drop 50%. Why? Because of tariffs, folks. Dollar General popped on earnings but got dragged down by DLTR's warning. Retailers are trapped, right? Raise prices equals losing customers. Keep prices equals losing margins. And add tariffs equals losing your sanity. Also, Ford is slashing EV prices again. Are we back in a price war? Maybe. Now, we also saw Tesla throw some tantrums as well. It's down 3.5% today. Musk popped off again over the new budget bill. Someone give this man a burner phone, please, to save the stock. Oh, and Wedbush just launched a IVES ETF, an AI-themed ETF, because we clearly don't have enough ETFs for us to blindly throw our money at. So expect AI to get added to the random tickers like it's 1999.com part 2. So what are we left with here? You're probably like, what is all speed? Why do you tell us this every day? Well, guess what? Today we had weak jobs, contraction in services, rising call volume, mega dark pool prints, and Trump doing midnight tweets with economic consequences. But somehow the market just drifted higher. Somehow, some way, it just went higher. So our game plan, don't fade Friday. NFP could swing this entire setup. Watch the bond market. It's your truth serum. And if NVIDIA breaks down, this whole float might flip to a flush. And if Trump tweets about tariffs again, go long volatility, people. So this is your no bullshit, meme-friendly market recap. If you learned something or just enjoyed the chaos, hit that like, sub, and drop your favorite ticker below. And don't forget, price is an illusion. Liquidity is real. And Friday's about to be wild. Stay sharp, stay hedged, and I will see you guys in the next one.